Hi, my name is Leslie Batson of Rebel Rock Wealth. Too often, consumers are online doing Google searches. Maybe they've seen a program, maybe they've seen a social media post, maybe they've seen an ad, and they've seen some kind of information that's popped up in front of them. It's piqued their curiosity, and they've dived into it. Whether it's, crypto, investing in the stock market, even life insurance, something popped up in front of them that caught their interest. They just went to that source, potentially just invested or bought into that product, and they didn't fully understand exactly what it was. So this is not unique to life insurance, but what I'm going to talk about is specifically in the area of life insurance. There are three types of life insurance. There's term life insurance, which is typically a level premium, very affordable typically, and it's available for a certain amount of time for just a term. Typically that term is, in the years where you're, actuarially speaking, less likely to die, but you can at least have some guaranteed death benefit in the time frame that you have that policy in place, okay? Most people are familiar with term life insurance. It is a great product. Next, there's whole life insurance. Whole life insurance is where the term is your whole life, so it factors in the cost to insure you for your whole life, but it has a guaranteed cash value, guaranteed death benefit, and your premiums are not going to increase at any point, and you can still build in flexibility, and you have a lot of other great benefits, okay? But it certainly is probably the highest cost, or where you'd have the highest premium of the different types of insurance, because for the very fact that it will insure you for your whole life, even if you live to be 121 years old. Okay. The third type, though, that I really want to focus on is a universal life, based insurance product. So it could be universal life, index universal life, or IUL, or variable universal life, or VUL. Okay. Specifically, the IUL and VUL are what I want to focus on in this particular discussion. More and more in my practice, I've had people come to me or refer people to me to look at their policy because they're not exactly sure what they have. They thought they had one thing, but I have to explain to them they actually have something very different. A lot of times people are sold an IUL or VUL type of life insurance product based on the fact that, well, let's focus on first IULs. On IULs, they feel very comfortable with them because they've been told you have a 0% floor, which means that if the index that they're following, or the fund that the index that they're following, if let's say it's S&P 500 and that year they have, say, a negative 10%, performance, then they're told, well, hey, you won't experience that negative 10% loss. You have a 0% floor, you'll just be credited 0%. So that makes the policyholder feel comfortable. It's like, okay, great. That's a loss I wouldn't have to incur. I would just get 0% instead of negative 10. But what they don't also explain, or they may not always understand, is that your account value can still decrease. It can still go down, even if your credit is 0%, because there are other fees and charges and possibly premium loads that are charged to your policy every year or every month, depending on how it's, structured within that policy. So your account value can go down, okay? Secondly, there might be a participation rate that's part of your policy, but the participation rate is only 50%. So that means that they would credit only 50% of that, 12% that you actually earned. Okay. So again, just understand how that works. I'm trying to just speak at a very high level. A no lapse guarantee. Okay. There's various types of guarantees that are offered, this no lapse guarantee, but usually that's only available for a certain number of years, maybe up to 15 years, maybe up to 20 years, something like that. You want to read your particular policy and see what exactly does that mean, okay? And how can that no lapse guarantee could be compromised, right? What are the different things that I could do with my policy that might, basically void that no lapse guarantee? You want to understand those things. So for a variety of different reasons, there are various aspects of an IUL or a VUL that most policyholders who have them don't understand, and they don't realize the risk that they're actually exposed to. So what I want to be able to do is help you to understand your insurance policy, whether it's a term, whole life, UL, VUL, whatever you have. If you have a IUL or VUL, what I would like you to do is this. Do not cancel the policy. Let's do a review. Let's sit down and do an analysis so I can help you understand what exactly you have. And then you can make a decision if this is for you. Does it align with what your financial goals are? If it does, great. At least you understand all the pros and cons and what it really means. If it does not align, let me help you work on some various options that we can do. Okay. So the first step is find a copy of your policy. If you have a paper copy, please scan it into a PDF where it can be emailed to me or sent to me. I can provide a link where you can upload it. I would like to review that policy PDF version. If you do not have a copy of your policy, you can either go online to your carrier's website and download a copy, or you may have to call to request one, and they may charge you a fee to do that. It might be $25 to get a copy of your policy, but it's imperative to have a copy because this is a contract. It's a legal contract between you and the carrier. You really want to understand what you've agreed to. Step 2, request an in-force illustration. This, again, you may have to contact your agent or the 800 number, customer service, to request a copy to get a in-force illustration. What this is going to be an updated illustration to what you were provided at the time when you purchased your policy. So it's going to reflect what you've actually paid into your policy up to that point and how that has changed, any projections in the illustrations moving forward. It'll also reflect any changes in the fees and charges and things that may have been outlined in your original policy, but have changed since that time. Okay, so whether your policy is 30 days old, 3 years old, 10 years old, however long it is, there's still an opportunity to look at it and see if there's a way to make any changes so that it can better align with whatever your financial goals are. Okay, so once you have a copy of your policy in a PDF and a copy of your in-force illustration in a PDF, you can go ahead and submit those to me. We'll do an analysis and we'll sit down and we'll discuss what you actually have, if this aligns with your goals. If not, what are your options? Okay, I hope this was helpful, and I hope to really just help to raise awareness of the various types of life insurance that are out there. The first job of life insurance is to provide a death benefit. And it's great that it has these additional living benefits, but you want to make sure no matter what you're doing in your overall financial portfolio, whether it's insurance, investing, whatever, you want to be very conscious and mindful of what the fees are and what the tax consequences are and how they impact your overall financial portfolio. Okay. Again, I'm Leslie Batson of Rebel Rock Wealth, and I hope this was helpful. I look forward to helping you with your insurance needs.